partly due to the fact that the markets have been so strong, and perhaps because people have more time on their hands during the pandemic, there seems to be a growing interest in do-it-yourself investing, DIY investing. Daniel, is this something more clients should be considering these days?
Do-it-yourself investing comes with a whole range of items you need to consider as an investor. When clients considering do-it-yourself investing come to us, we help them through the pros and cons of that decision. DIY investing does come with a time commitment and an increased level of financial knowledge. As a DIY investor, the responsibility is on you. You need to figure out which stock, or which exchange traded fund, which bond, and then figure out the appropriate amounts for each investment type. You need to learn when you should buy and when you should sell. All of these decisions for some people may add to their stress. In addition, you must be in control of your emotions before making rash decisions or reactive decisions. An investment plan for a DIY investor is a must. The plan provides the structure that's needed to effectively manage investments and something that can be referred back to in times of uncertainty. For some people, DIY is an option, but it's for a small percentage of the people that I talk to. Generally, people are too busy to manage their own money, nor do they care to do so. As a DIY investor, you do pay a smaller amount in fees, anywhere from 0% management fee to 0.15 for some exchange traded funds, but ultimately you're on your own to make those investment decisions. A potentially more viable alternative for DIY or ETF wannabes is the robo-advisor option. The robo-advisors really take the decision of where to invest off your plate. They make it easy to set up the account. They make it easy to contribute. So they do charge a bit more than do-it-yourself investors, but they do provide a valuable alternative for those investors who do want an ETF portfolio. Most of our clients or my clients want to deal with an investment advisor who provides a bit more personalized, a bit more attentive service, and someone who can talk them off the ledge when markets are going down. We saw that in March of 2020. Some of my clients with online brokerages and robo-advisors are waiting on hold for 60 to 90 minutes just for someone to talk to regarding their account. More traditional investment advisory options may have higher fees, but you will likely get faster and better service. The last option which Canadian investors have at their disposal is the most expensive, but it's the full service investment advisor. Clients have all their financial planning and all their investment needs provided by one advisor. The service is usually offered by banks and full service brokers, and the fees are usually charged as a percentage of investments. Now, is that the right way to do things? For some, perhaps, but I think clients should ultimately be separating financial planning advice and investment advice and the costs associated to each.
I couldn't agree more, Daniel.